Hello everybody, this is the third international tax planning technique that I'm going to introduce to you, and also with a short lecture to it. It is a technique we call thin capitalization. Now, as the name suggests, alright, it goes to mean that a company in Thailand, here I call Thaiko, a company in Thailand, has the paid up capital of the company at a thin capitalization, which is a low capital paid up. Alright, now just simply on this, with a very low paid up capital of the company, and let's say here I give the example 4,800,000 baht paid up capital. At this amount of low capital, it already has by itself two corporate income tax reduction implications. Just looking at this by itself. Alright, and this goes to the first two aims for this technique. Alright, two ways on corporate income tax reduction. Let me write it clearly here so you can see it. Two ways on corporate income tax reduction. And as we explain this technique further from corporate income tax, it also raises another income tax reduction by withholding tax reduction, specifically on withholding tax reduction for a foreign company not operating business in Thailand. So the aim of thin capitalization technique is actually on three fronts. The first front and the second front is on reducing corporate income tax of this company here, Thaiko. Alright. The third front of income tax reduction is the reduction on withholding tax for foreign companies not operating business in Thailand, which, as you will see, is referring to the withholding tax payable by this bank here. Alright. This technique is suitable to be set up under normally two situations from the very beginning. One is that the intention of this company is not to have a high paid up capital, thus maintaining it as a small company or an SME or small medium-sized enterprise, which, as we have already explained in our explanatory notes, is subjected to a lower CIT rate, 15%, maybe even 0% CIT rate. Alright. Or it is a situation where this company cannot raise enough capital to the amount of capital that it needs to operate. Okay, say for example, this company, Thaiko, sells shares, and the people who paid for shares paid for shares. The money that comes in from the payment of shares, alright, is not enough. You can't see clearly. I need to bring this down. Okay, it's not enough to get the capital that this company Tyco ideally wants. So the capital that Tyco would really like to have is, say, for example, 85 million baht, not 4,800,000 baht. 85 million baht is the capital that Tyco really needs in order to operate. But through the sale of their shares, they are not able to raise that high of an amount, and they end up with a paid-up capital of only this. This compels this company, Tyco, to have to borrow money as their operating capital because they cannot sell enough shares to raise enough capital. So you have here a bank in the United States, a US bank, a bank in the United States. All right. Tyco would have to borrow say, for example, 80 million baht. From the US bank, so that it would bring the operating capital of Tyco to be 84 million baht and 800,000 baht. Right? Now, with this borrowing, of course, there'll be interest to be paid later. I'll come to the interest soon. Now, just only with this, you would see that at 4,800,000 paid up capital, Tyco would not be subjected to the regular standard rate of 20% CIT on net profit per year. You will be subjected to a lower CIT rate per year. Why? Because as I say, it is considered as a small company or SME. Right? That means if the net profit of the Tyco is more than 300,000 baht, up to 3 million baht, it is subjected to the CIT rate of 15% of the net profit per year. Right? And if it is lesser than 300,000 baht net profit per year, what would be the CIT rate that Tyco will be subjected to? If you don't know the answer, think about it and check your explanatory notes. The answer is there, almost jumping out at you. Now, this 800 million baht, 80 million baht is a debt. It's a loaned amount, which means that Tyco would have to pay interest to the US bank. And let's say for our simple discussion, make it simple, let's say the interest payable back to the US bank is, let's say, 10% interest rate. $10% interest rate per year. Let me write this out clearly. small, so better write it out clear, you can see it. 10% interest rate per year of this 80 million. And that would be, how much is the interest? The interest would be, what is 10% of 80 million? 10% of 80 million is 8 million. $8 million baht interest paid out every year by Tyco to the US bank for this loan amount. Now, this interest of 10% would be recorded into Tyco as what in its accounting book? The interest of 10%, 8 million baht, would be recorded into the accounting books of Tyco as an expense. Now, as we talked about, expense creates the possibility of reducing the net profit of Tyco per year. Right? This 8 million baht interest paid out to the US bank is recorded into the Tyco as its expense. This expense of 8 million baht would further reduce the net profit of Tyco per year. And if the net profit of Tyco is reduced, it will be also subjected to, possibly subjected to, a lower corporate income tax payable. So that is already reduction of corporate income tax on two fronts, right? If you cannot see it yet, I'll write it out in a slightly different red color. One, small company, low capital, paid up, subjected to lower CIT rate, depending on the net profit amount, as explained in your explanatory notes. Two, this interest paid out is an expense of Tyco, expense of Tyco. And if it's an expense of Tyco, it would further reduce the net profit of Tyco, and possibly subjecting Tyco to a lower CIT amount payable at the end of the year. So 1 and 2 is already here. Two ways on CIT reduction. One here and one here. Okay, take a moment to take it in. All right. Now we come to this one other way on reduction on income tax, and that is on withholding tax reduction. I'll take it before I explain this time. If you look over here, USA and Thailand has a double taxation agreement, and the double taxation agreement between the US government and the Thai government has a condition to provide a reduction of, let me put it into a different color so you can see, to provide a reduction of withholding tax payable on this interest. You see, this amount of interest paid out to the US bank, this is income for the US bank received from a Thai customer. This 8 million baht interest paid to the US bank is income of the US bank from a Thai customer. This 8 million baht interest received by the US bank is subjected to withholding tax of how much? Well, the regular rate is, what is the withholding tax for interest paid to a foreign company, US bank in our example here, not operating business in Thailand? What is the withholding tax rate? 15%. Withholding tax. 15% withholding tax. Thai Coal would have to withhold 15% of the 8 million. Whatever is remaining will be paid to the US bank as its income. Thai Coal would have to withhold 15% from the 8 million as the withholding tax charged to a foreign company not operating business in Thailand. But this is where our double taxation agreement between the Thai and US government revisit. But because of this provides further reduction on the 15%. Specifically, I'll write it here. Article 11 of the US-Thai Double Taxation Treaty. Article 11, 2A. Article 11, 2A of the Thai and US Government Double Taxation Treaty provides a discount of this 15% withholding tax to only 10%. So there you have withholding tax reduction here because of this. Article 11, 2A of the double taxation agreement between USA government and Thai government. So we could say that this is the third way for the tax reduction. All right, number 3. You could say here, number 3. Okay, now one of the common questions that the Revenue Department of Thailand likes to ask if this technique has been used, right, is they like to ask the question, the Revenue Department of Thailand love to ask this question. And the question is, why does Taiko have to borrow so much of its capital from a US bank? Why can't Taiko raise 84,800,000 baht here in Thailand through the sale of shares? Why must Taiko have to borrow such a large amount from a foreign bank? All right. So it is absolutely crucial, okay, to be able to explain or justify to the Revenue Department. Taiko has to justify or explain to the Revenue Department why it is not able to raise the capital that it wants to, ideally to be able to operate its business, thereby compelling it to have to borrow. That's all.